The Sensex and the Nifty end lower after the last hour's sell-off. Reliance contributes the most to today's fall in the Nifty. Unsecured loans continue to be popular among banks and among borrowers. Personal loans rise by 23% year-to-date, while outstanding credit card loans are up 16.1% in the same period. PTM's woes continue as the stock hits lower circuit for the third straight session. The company has wiped out over 20,000 crore rupees in market cap so far. ED investigates the Indian owners named in the 2021 Pandora Papers, sends summons and seeks details. The government seeks an additional outgo of over 78,000 crore rupees in the second supplementary demand for grants. Jharkhand Chief Minister Champai Soren passes the test vote in the Assembly, gets 47 votes in the 81-member Assembly. Hello and welcome. You're watching The Reporter on NDTV Profit. I'm your host Pallavi Nahata, and as always, we bring to you market headlines along with national and international newsmakers. Now, starting off with an overview of how trade looked like today. Benchmark indices failed to hold on to the opening gains and ended the day in the red. Harsh joins us to give us a wrap-up of all of the market action today.
Well, yes, absolutely. So we had a good day of trade all the way till the last hour when markets really took a dive. In fact, from the top of the day, we fell nearly 200 points to close around 1/3% lower where the Nifty is concerned. So almost 1% down from the top for the Nifty. Now, in terms of what really moved, let's quickly look at the Nifty 50 winners. The top two winners on the Nifty 50, UPL the top two losers on the Nifty 50. I'll start off with UPL, the top loser on the back of those numbers, disappointing numbers that came out. Bajaj Finance also fell nearly 3.5% in trade. In terms of the gainers, you had Tata Motors, again on the back of numbers, Coal India also up, both of which gained 5% plus. So definitely positive there. When I'm looking at which was the key drags in terms of the Nifty contributories, you had the likes of a Reliance, a UPL, which led some of those drags, and those will come up on the screen next to me. Let's quickly look at where the broader markets were. They outperformed the Nifty, flat on both the mid-cap as well as the small cap. In terms of the mid-cap losers, the drags were PTM and Bank of India. PTM, of course, on everything that's playing out. Bank of India on the back of numbers. The Nifty small cap also was flat. You had the likes of an Engineers India, which dragged the Nifty small cap, and Deepak Fertilizers also was a drag. In terms of the top sectoral index for the day, you had the Nifty Pharma, which was up, and gains were led largely by Glaxo and Lupin, both of which were flying away in trade. Let's look at the Nifty FMCG as well, which was the top sectoral loser, closed in the red for the second consecutive session, dragged by United Breweries, United Spirits. But of course, overall, you saw markets down around 1/3%. So it was a tough day of trade, especially when we spent most of the day in the green.
Unsecured loans continue to be popular among banks and borrowers. Now, contrary to general expectations, personal loans have continued to grow despite the RBI's restrictions. My colleague Mimansa joins us with more details on the issue. Mimansa, over to you.
Yeah, so the demand for unsecured personal loans do not seem to be tapering off, even as the RBI in November increased the credit risk weight by 25 percentage points on unsecured credit, which is precisely the credit card loans and the consumer loans. The latest data from the RBI also shows that the unsecured personal loans rose 2.8% month on month as on December 29 to 13.3 lakh crore rupees. Year to date, the rise was 23%. Similarly, outstanding credit card loans were up 3% month on month to rupees 2.5 lakh crore, and year to date were up 16.1%. S&P Global expects that the share of unsecured personal loans in the bank's total loan book could continue further and could continue to rise because this will help banks to mitigate the risks on the downside risk on margins, which is what we have seen in Q3 as well from tighter liquidity conditions in the banking system. Now, the Reserve Bank of India's move to increase credit risk weight has not yet hindered rapid growth in this segment, is what S&P analysts are saying. While this has led to a significant hit in the capital adequacy ratios of several banks in Q3, they are looking to pass on the higher cost of capital to personal loan borrowers. Now, what we have to see is that how long can the demand for unsecured credit sustain, even as the banks decide to raise interest rates on these loans.
Thanks a lot for that, Mimamsa. Now, the trouble for PTM appears to be never-ending. The company's woes continue as the stock hits lower circuit for the third straight session. The company has wiped out over 20,000 crore rupees in market cap so far. Let's go across to Pragati Oberoi for the latest on PTM. Pragati?
Right, Pallavi, PTM, 197 communication has been a major dragger in the markets, bringing Nifty mid-cap also down. And for the third consecutive day, the stock has tanked, of course, on concerns by various entities after RBI's clampdown. Now, the latest update we have for you is from last evening, because 197 communication denied any investigation by ED for anti-money laundering activities. The company has also said that neither the company nor the CEO are being investigated by ED for any money laundering. It is also denied any involvement in anti-money laundering activities. Now, let me put the context very clear for our viewers over here. About day before yesterday, NDTV Profit also exclusively reported that the reason behind RBI's clampdown, based on sources' information, was that RBI was suspecting money laundering activities happening at PTM Payments Bank, and there were a lot of PAN cards that were linked to the same number. In fact, there were KYC upgradation concerns also at PTM Payments Bank. That was the main reason why RBI clamped down on the entity. That's the information we have from sources. But 197 Communications has come forward and denied any such reports, and that's the latest update we have for you. As we have more, we'll come back to you.
Thanks a lot for that, Pragati. But stay with us. The National Credit Guarantee Trustee Company is doing a forensic audit of Bandhan Bank's credit guarantee portfolios worth rupees 23,300 crore rupees. What have you been picking up on that front, Pragati?
Pallavi, so this is an NDTV Profit exclusive. We all knew that Bandhan Bank's credit guarantee portfolios are under NCGTC's audit, and that news came a couple of days back. But what Bandhan Bank told the stock exchanges on 9 January, that the audit is just for a CGFMU claim, that is not true. According to an internal document that we have reviewed, the forensic audit that is happening is not just for the CGFMU claim of FY21. It is for two portfolios. One is the CGFMU portfolio worth 20,800 crore rupees, and the other is the ECLG's portfolio, which is worth 2,500 crore rupees. So in entirety, the entire NCGTC forensic audit is for credit guarantee portfolios worth 23,300 crore rupees. So that's a significant amount. And sources also told us that a preliminary audit was initially conducted by on Bandhan Bank around late 2023, but because NCGTC was not satisfied entirely with the responses and whatever submissions the bank made, they decided to initiate a forensic audit. Now, under both schemes, obviously lending happened under the amounts that we have clarified, and a certain number of borrowers who took that money were classified as NPAs. NCGTC's main concern, according to the information given to us by our sources, is that they can't identify who exactly are the 4.9 lakh borrowers that became NPA. That's why they have to initiate the forensic audit of the entire portfolio, contrary to what bank said in the exchange filing, that it is just for the one tranche of the portfolio. That's the NDTV Profit exclusive for you.
Moving on, Tata Motors has announced their Q3 earnings. The company's revenue is up by 25% and margins have also witnessed an expansion. My colleague Vinay joins us with the key takeaways. Vinay, how will Q3 performance impact the company's future growth trajectory?
First of all, the profit more than doubled. And it was a significant beat on the consensus estimates, and that we are seeing the result is on the stock. It has risen quite significantly today. And if you look at why this optimism around the company it is because of JLR. So JLR's order book is the main reason that analysts are giving so much positive commentary for the company. If you look at the company's order book right now, it was 148K at the end of Q3. It is expected to decline. But what is interesting here is that the high margin models comprise 55 to 60% of sales and 76% of the order book. So obviously analysts are expecting that the good revenue and performance of JLR will continue in the coming quarters, because even if the order book declines in the coming quarters, you can still have some cushion for the FY25. And as analysts have said that the next leg of growth will be driven by JLR. You can see the Motilal Oswal has said that it expects EBIT margin to reach 9.9% by FY26. And Nomura has said that the success of JLR's EVs may drive re-rating as well.
Thanks a lot, Vinay. The stock was up nearly about 5.5% in today's trade. Moving on, there's also a fresh update in the Sony Z merger saga. Sony is planning to continue to arbitrate against Z in Singapore. Sony's plan comes at a time when the SIAC has defined interim relief to the company. Varun joins us with more details on the news. Varun, what does this mean for both the parties involved?
Yeah, hi. So in a statement to NDTV Profit, Sony has said that it is disappointed in the decision rendered by the Singapore International Arbitration Centre to deny interim relief to the media giant. This statement comes a day after the SIAC had said that it has no jurisdiction or authority to injunct Z Enterprises from approaching the National Company Law Tribunal to implement the merger scheme. As we all know, Z has moved the NCLT for an implementation of the $10 billion merger between Z and Sony. Now, Sony has said that SIAC's decision is only a procedural one and that it will continue to vigorously arbitrate this matter before a full tribunal in Singapore. And it has also said that it will pursue its right to terminate the merger agreement and also seek a termination fee and other remedies. It further said that it is confident in the merits of its position both in India and in Singapore.
Thanks a lot for that. Now we bring to you yet another NDTV Profit exclusive. Implementation of the Cashless Everywhere initiative may prolong the working capital cycle for hospitals from 45 days to 60 days. My colleague Monal brings us the details on this development. Over to you, Monal.
Well, the Cashless Everywhere initiative, which was introduced on Jan 25, essentially means that policyholders can now approach any hospital of their choice to achieve a cashless treatment. While we took a look at what it would do to insurers, maybe impact short-term payment cycles for them, let's take a look at how it will impact the financials of hospitals. Our conversation with industry leaders and hospitals indicates that it could take up the working capital requirement to up to 60 days from currently 45 days. This would typically mean that there's a shift in the payer mix of the hospital and a higher dependence on insurers. Currently, 50 to 70% of hospitals' overall revenue comes from insurance and government schemes. Now, if we were to look at the broader picture, say the total health claims for the industry in FY23, it was around 71,000 crore of health claims. Of this, only reimbursement claims were close to 25,000 crore rupees. Now imagine this 25,000 would now be paid at the insurer's discretion on a cashless system. This would mean a huge working capital block for hospitals. Now, it would also have some impact on the average revenue per occupied bed, which is the ARPOB of hospitals. the insurer and the hospitals negotiate on certain terms. If the terms are favorable, it could mean an increase in the ARPOB, but if they are not, it could also mean that the ARPOB could go down. The industry is also looking at coming together, that is the General Insurance Council is proposing a common empanelment rate for hospitals. Now, if this were to come into picture in the next couple of months, it would mean that all the insurers collectively will negotiate rates for empanelment with hospitals, which would give a greater bargaining power to insurers, and on the other hand, have an impact on the hospital's revenue. There are upsides to this as per the industry, which says that it would increase the patient volume that's coming into the hospitals and would also increase operational efficiency.
Thanks a lot for that, Monal. Monal also spoke to Nilesh Kambi, the Chief Financial Officer of Star Health and Allied Insurance. Let's listen into a slice of that conversation, especially what he has to say on Cashless Everywhere initiative.
When it comes to awareness of insurance, India continues to be an underpenetrated market. COVID has created customer awareness and the importance of health insurance. When you talk about penetration, only 54 million lives are covered. 4% of the Indian population is covered through retail health insurance. So there is enough and more opportunity for growth for the segment and for the well-being of the society as a whole. Cashless claims, again, the rates are negotiated to an extent with the hospitals. We know that this hospital charges good rates or, are not doing any practices which are not in the interest of the customer. So that also helps us to build a good relationship with the hospital. So overall, it will help the profitability. It will help in improving customer service. There will be low customer grievances, which will further improve the penetration of health insurance in the country. So it's a very good step forward.
And with that, it's time to slip into a short break. We have a lot more lined up for you on the other side, so stay tuned. Welcome back. You're watching The Reporter on NDTV Profit. Now, the Enforcement Directorate is presently conducting investigations against the Indian owners named in the 2021 Pandora Papers. The names include Sachin Tendulkar, Anil Ambani, Neera Radia and more. My colleague Charu Singh joins us to tell us more about these ongoing investigations.
Hi, Pallavi. So as we all know that these Pandora Papers are 11.9 million confidential documents which have been taken from offshore service providers, and they talk about 29,000 offshore entities that have been used by a lot of affluent people globally. Now, the report that we are bringing right now is about the Enforcement Directorate steps taken against the Indian names that came out in these papers. These involve a lot of wealthy and affluent people of our country, including Anil Ambani, cricketer Sachin Tendulkar, and even Gautam Singhania of Raymond background. And we have the lawyer Harish Salve, Neera Radia. Apart from her, we also have the Maharaja of Jodhpur, Gaj Singh, Samir Thapar, and Lalit Goyal. Now, what we are going to do is we are going to take a look at what is the status of the probe that is going on against all of them, through ED. So coming on to Anil Ambani, currently ED has sought more details and has issued directives and summons under the FEMA provisions. For Sachin Tendulkar, directives have been issued on his company and Egmont request has been sent to Financial Investigation Unit BVI, which is to basically get more information and cooperation from the financial investigation units around the world. And for Harish Salve as well, inquiry has been initiated and Egmont request has been sent. For Neera Radia, searches have been conducted and data has been seized under analysis and investigation is still going on. For Gaj Singh, again, Egmont request has been sent concerning Vore Limited UK and replies have been received. And coming on to Lalit Goyal, again, who was arrested in November 2021 and later released on bail, Egmont requests have been sent to identify foreign assets. That's all for now, and we closely follow up to get more information on this.
Thanks a lot for that, Charu. Now, in an exclusive interaction with NDTV Profit, Rado CEO Adrian Bossard has said that the Indian growth story is here to stay for at least the next 5 years. Sesha joins us to tell us more about that.
Right, so India outpaced China to become the largest market for Rado watch company. 2023, in fact, marked the record sales growth, registering double-digit sales in the Indian market. However, the trend of increasing sales, it is not just limited to Rado, but if we look at the data from the Federation of Swiss Watch Industry, India imported watches worth over 2,000 crore, which is an all-time high. However, given the penetration level, India remains low and is ranked at 22. Now, the higher imports from India comes at a time when the larger Asian market, that is China, imported just 7.6% growth in terms of imports of Swiss watches. And if we compare it to 2021 levels, that's a decline of 6.9%. Now, Adrian Bossard, who is the global CEO for Rado, expects the India growth story to remain strong in the next 5 years. This would be driven by the rising affluence and as well as the expanding consumer base in India.
Thanks a lot for that. Now, moving on, the government has sought an additional outgo of over 78,000 crore rupees in the second supplementary demand for grants. Let's go across to my colleague Janani Janardhanan for more on this. Janani, what's the government's plan and how does it plan to utilize the additional money?
Thank you, Pallavi. Like you said, the government has sought for a second supplementary demand for grants from the Parliament today on Monday. And what this is in fact a nod for an additional spending of 78,673 crore. This is the additional outgo that will go. However, the total additional expenditure is, they're pegging it at around 2 lakh crore. So a majority of this, almost close to 1,21,000 crore, is going to be matched by departmental and ministerial savings. But like you said, on to the more important question, where is this money being used? Primarily, one, it's going towards the Manrega scheme, which is the Mahatma Gandhi National Rural Employment Guarantee Act. So, considering the claims that have been coming for this demand-driven scheme, the government has sought to allocate 10,798 crore. There's also a higher outlay for education. This is something that we're seeing new for the Madhyamam and Uttar Shiksha Kosh. This is going almost 12,500 crore. In fact, more than the Manrega allotment. This is the highest allotment that's going in this supplementary demand for grants. Of course, then the food subsidy, the PMGKY, which was extended for 5 more years as announced by the Prime Minister before, an expense that was in fact expected. There's also defence pay and allowances that has had a considerable outlay of 9,162,000 crores. Of course, there's also the Senior Citizen Welfare Fund and Defence and Pension Retirement. So a lot even on pension and retirement benefits. The pension, Defence Pension and Retirement Fund, almost 3,890 crore going towards that. So as you can see, there is a spread focus, one towards Manrega, towards food subsidies, these are the essential subsidies, and the other towards social schemes like pension and retirement benefits and education. Back to you.
Thanks a lot for that, Janani. Now, the JMM's Champai Soren won a test of strength in the Jharkhand Assembly today. Champai Soren-led government won the floor test after getting 47 votes in the 81-member assembly. Arrested JMM leader and former Jharkhand Chief Minister Hemant Soren was present in the assembly in Raipur to take part in the trust vote. That's all we have for you today on this edition of The Reporter, but stay tuned to NDTV Profit for more news and updates.